Hello, Tashuma. How are you?
I'm doing great. How about yourself, Yana and
Good.
Melanie? Good morning. Good
Thank you.
Good
afternoon.
morning.
Good
Good
morning,
morning.
everyone. Well, thank you guys for taking time today and joining us, jumping on a live. So we're going today to celebrate, Liam, the Life Insurance Awareness Month, by bringing some light, some clarity, hopefully some value to our viewers about how life insurance works, and how important it is to know about all of the little bit perks that it has, because it's so much more different than it used to be, and it's so much more valuable. So let me start by introducing myself. My name is Yana Gerdes. I'm a financial professional, and this is my amazing business partners, Melanie and Tashuma. Thank you guys so much for jumping on, for supporting us, and yeah, let's bring some value to everyone who searching it, right? Like want people that seeking the knowledge, and we are happy to educate them. So, like, let me start saying by ever since I started this career path, I learned so much about the importance of life insurance, of course, but also we learn so much about fundamentals of financial literacy and how important those little things, those little tactics that you can use to change the trajectory of your family's financial future, right? And it comes in different categories, right? Of course, there is like the growth, there is accumulation. The very important part of it is protection. It's protection of your assets, building legacies. And I always thought that, life insurance is for old people. Like, I don't need to worry about that. But I learned so much. And my light bulb in my head like went off when somebody was asking me like, well, you don't think life insurance is important, but let me ask you, do you have insurance on your TV? I'm like, yeah, I do. Well, do you have insurance on your house, on your car? I'm like, yeah, I do. Like, okay, well, do you have an insurance on your phone? I'm like, yeah, I do. But you don't insure your life. And it was like mind blowing, like, oh my God, like the simplicity of and how ridiculous it is. Like, we insure everything that loses value. But life insurance, it's only gains value the older we get, and it can literally pass wealth to generations, so yes, so that's what we're gonna talk about it. We have the whole month to cover in depth everything, but today we're just gonna talk basics. So we'll start from the beginning, right? And also one thing is that stood out to me is that wealthy people are the biggest populations that use life insurance. Wealthy people use it for generations, right? The corporations use life insurance. Banks, 65% of banks are invested in own life insurance. But for some reason, middle and lower class don't see the value in it, don't use it as often. And I always was asking myself, well, why? Is it because we don't think like legacy? We don't think, in the up long far in the future? Or is it because we just maybe not as educated in that topic? So that's why we are here. We're trying to educate everyone so you guys can take advantage of all of those benefits. So yeah, let's talk about how life insurance works and how important it is to have family protected. Right?
Yeah, and I have to 100% agree with Yana. I think it's the lack of knowledge and education. Before I came into the financial industry, I didn't know the difference between a term and a whole life policy. I didn't even know there were different types of life insurance policies. So 100% agree with you, Yana.
Exactly.
It is. It's information, right, that isn't given to us for the most part. This is information that we would hope that would be taught, right? But for the most part, we we teach people this information because it isn't information that's readily given, and it's powerful information, which is the other reason, right, why it's so important for people to kind of understand what's available and the way that we can help.
Absolutely. I
Mhm.
agree.
Very true, very true. So I guess we'll go ahead and kick it off. And again, we're going to keep it super simple, right, Yana? It's
Yeah,
simple terms because, not everyone is very knowledgeable when it comes to the terminology of life insurance. We're first going to cover, how does life insurance work? And again, simple terms, guys, it's life insurance works by allowing your beneficiaries to claim the financial payout in if you were to pass away, and it's considered the death benefit that goes to your family. Obviously, if you pass away while the policy is active, your beneficiaries will then file the claim for their portion of the payout, and they can use that for expenses or anything else that's needed. There are some policies that have additional features. Life insurance has evolved so much. Before it was just a death benefit, and life insurance, it is now for the living also. And we'll get into those details more in depth a little bit later. But the payout can also be used for whatever your necessities are at the time that your loved one passes away, to cover funeral costs, mortgage payments, education expenses, or anything else. Because again, our expenses, they don't stop. They continue going. And especially if the family member that passes away is, or the loved one that passes away is a breadwinner of the home, the expenses don't stop. So it's very, very important for us to know these things and what happens after we do pass away. um, and that's just kind of a rundown, super simple. If y'all have any questions, please put them in comment, and we will get back to you as soon as possible. Again, we're here to educate you, hoping that you all gain a little bit of knowledge. And then,
Absolutely.
yes, go ahead, Yana.
Yeah, absolutely. Like that's a great note there. And so, like I said, we're gonna cover a little bit of everything. So a lot of people wonder sometimes, like, well, like, what does life insurance cover? Is it everything? Like, what is it? And there is an answer to that too. The life insurance typically covers all types of deaths except suicide if it's done within first 2 years of the policy active, and that's for a reason, right?
Mhm.
And but everything like accident, like if somebody got in a car crash, heart attack or disease, homicide, except if the owner of the policy been killed by beneficiary, and that's for a good reason. That's to protect actual policy owners, because when the life insurance started many years ago, that was a huge issue because rich people used to just insure everybody and then literally murder them and get huge payouts. So that was corrected for people's benefit and protection. So any illnesses and so on should be covered, like old age, war, terrorism, everything should be covered by life insurance. So, yes.
Very true, very true.
So another thing I think that is important as well, right, is how do you determine that amount of coverage, right, for insurance? So I guess generally speaking, right, rule of thumb is 10 times the amount of income, which is actually under the amount usually that's needed because there's other things that come into calculation, right, with the expenses that you have. Um, an acronym, I guess we use is that, right? So we would look at your debt. Then we'd also look at your income. We take a look to see what are you making now, right? Is your income at the level that you're at, is that going to continue to stay where it's at, or do you see yourself increasing your income, right? As time goes on, usually is the case. And then what are the other expenses that you have, right? Your final expenses, in particular, if you have health concerns, right? That is also a number one eater of your income and your wealth. It's going to the hospital, getting sick. So we look at those things. In addition, we have to look at, do you have children? Do you have a mortgage? Do you have a car? Right? Those things also, they play a big part in determining the amount of coverage that is appropriate for everyone.
Exactly.
Very true. I do see that we have a question, so I'd like to chat a little bit with I am JR Galicia, and his question is, can you get covered if you're already sick or poor health? And Yana and Tashuma can add on to this. I'll just say very quickly that for the most part, we can get you covered, and we have a platform that with just a couple of basic questions, we can get you covered within 15 minutes. If for whatever reason that we have issues going that route, you know, we are all financial professionals. We are brokers. We work with several different companies. We don't just work with one. So we will hunt down that perfect policy that suits your needs, and we won't stop until we find you some great coverage. So we will go out of our way to make sure that we can find you the coverage that you need, JR.
Yes. And exactly. Thank you, Melanie. That was a great answer and a great question, Jared. The difference between us and others is that we are what you will call a non-captive company, right? So, like, for example, if you go to Bank of America and you ask to open an account, they will find you the best account they have for your needs, but they will never tell you, hey, you know, the Chase today has promotion. They have a bonus of $600 on top, and they have better rates for this account. They will not, because they are captive company. We as a non-captive company, we work with 75% of multi-billion financial institutions in North America. So when client comes to us, we actually go, we listen to them, we become a broker, and we find company or companies that suits exactly the needs that they searching for, which
Right.
makes us one of the best to come and to ask for services like that. And we provide, you know, financial education, and the consultations are free, absolutely free for our clients, which kind of helps our agents to feel great about what we do and have no agenda whatsoever when we sit down with a client. Our only mission is to help them and bring value and protect them, because we stay with our clients for many years. You know, we are big on retention, and we take care of our clients. We do annual reviews with them, and it's always mission before the commission for us. So yes.
Definitely. I like that. Mission before the commission.
Absolutely.
We have another question. Kenneth Mobley and Tashuma, I know you can probably answer this one. How much coverage does a person need for coverage? I think
Um,
you touched on that just a minute ago, but if you want
oh,
to.
I'd love to go. I'll go over it again. Absolutely. So that is right. That's specific to right your client, right? So everyone's situation is different, and that's the reason why we take the time, right, to look at your income and your particular financial situation. So again, some of the things that we would look at, we'd look at your debt, right? What is owed? Do you owe anything on your car? Do you owe anything on your mortgage? Do you have student loans? Anything like that. And then we'd look at your income, right? Your income, your ability to make money, right? And then what do you see in the future, right? In the next 10 years? Are you the sole income provider for your family? Is it just you? Is it just your income? Um, are there other expenses, right, that are announced to you? Your final expenses will also come into calculation with that as well. So, how much is it going to cost for you to live comfortably when you retire? What type of life would you like when you retire? Um, do you expect to have income? Do you have other income streams or assets that are going to be able to give you additional funds? Right? Should heaven forbid, right? There's a situation where you need additional funds. So all of those things come into calculation, right? They seem like a lot, but it's really simple. We just take a look, we pull back things, go through it real nice and slow, and then we we suit your needs best. Put it this way. So once we get the total amount, of everything, right? And we make it really simple. Then we just look at the amount of coverage that you need, and then what type of coverage would be best for you.
Exactly. I agree. Great answer to Shoma, and you covered it in depth. But to like make it even simpler for people that watching, like if you like got lost a little bit with technicality of it, we use a simple formula called DIME. Basically, D stands for debt, I for income, and mortgage. M for mortgage, and E for education. So basically, if you have debt, any loans outstanding, credit cards, we take your annual income, especially like Tashuma said, like if you're breadwinner, and we times that by 10, so your family have time to recover, your kids can, your wife can stay with your kids and help them grow up and educate them if she's stay-home mom especially. We look into if you kids planning to go college, if you want to cover that. And the last one is mortgage. If you have any outstanding mortgage payments, and we cover that. We add all that together. That's your basic formula to calculate how much of life insurance you need. And then it's also can be customized, of course, up or down from there. So hopefully that answers your questions.
That's
But
great info, Yana. I love using the dime concept when trying to find adequate amount of coverage for families. That's
exactly.
awesome.
And a lot of people are asking, like, how do we determine the premium, right? So before you enter the life insurance contract, the life insurance company will determine your required premiums, and that will be based on your age. That's why we say the younger you are, the easier it's to get that life insurance before any health issues popped up. Because usually by the time people decide to get life insurance, guess what? They can get one, or it's extremely expensive. And then they have that awareness of how valuable that is and the need of the life insurance. So think of it as early as you can. And another good thing about this is try to own your own life insurance, because a lot of people have through corporations and companies. But what happens is if you lose your job or if you switch the job, you lose that premium that you had locked in, because if any health issues pops up, it's going to go higher and you might not even be qualified anymore. And not every corporate life insurance can be transferred into different one, or you can take it with you, if that makes sense. Second one is a gender plays a role in it. Health and medical history, again, very important. That's again why you should get it as young as possible before any health issues pops up. Coverage amount you choose, the more life insurance you need, the higher the cost will be. That's a no-brainer. And type of life insurance. Of course, there is term life and there's permanent life. Term life will be cheaper, but don't underestimate the value of it. We're going to talk into this a little bit more in a minute. The term life is very different these days, and it can definitely bring some extra benefits and be a great, choice for somebody who is on a budget and can take advantage, or it can accommodate the whole life insurance too. So kind of combine both of them. And of course, there is permanent life insurance. So hopefully that will clarify for people how the premium is get determined. So with that said, like I said earlier, there is two types of life insurance. There is term and there is permanent. So let's talk a little bit in details about what those options are. So Melanie, can you please tell us a little bit about term life insurance and how does it
Yes.
work?
Definitely. And again, we're going to keep it super simple so that you all, can understand what we're talking about. And if you have any questions, again, please reach out to any of us. In simple terms, basically, your term life insurance policy is a coverage that is for a limited time of years, and they can range from 10 years, 20 years, up to 30 years. So you are open to select the term, and the amount of coverage that you will need, and that will determine your premium. So if you pass away during the term, as long as the contract is not in violation, like Yana had mentioned before, it's not a suicidal event within the first 2 years of the policy, then the beneficiary will receive the death benefit. If the term comes up for expiration date, most of them do have the option to renew and continue coverage, but typically, most carriers will adjust your premium by the age that you are at the time that your policy's term runs out. So, of course, you'll be 20, 30 years older. In turn, your premium will most likely be higher. Some features that I really like about the term, it's a coverage that's set for a certain amount of year. It has the renewal option. Your premiums are more affordable, as Yana brought out with the term policy. They do not increase. Your premiums stay the same throughout the whole term. And then again, at the end of the term, you have the option to renew. And I think that the term policy is really, really important for families that have a mortgage, that have young children or even older children that are going to college, because this is a great type of insurance to cover your mortgage and your financial needs that are, those expenses that are immediate as soon as someone passes away. Like if you're the breadwinner of the family, you want to make sure that you have your finances covered if something does happen to you, to make sure that your spouse and your children can continue to live the life that they've been able to live up until you're passing away. Those are kind of just some key points on the term.
Right. And I'm sorry if I missed, but did you also mention will and trust that some of our policies are included?
Yes, thank you for that. We do have a complimentary will and trust for our term policies. And, as I mentioned before, life insurance has changed so much, and we're probably going to get more into that. But now term policies actually can be tailored to have living benefits. If you do get diagnosed with a chronic illness, a terminal illness, or a critical illness, then the policy will actually pay out to the policyholder, because when you're going through such a devastating illness, your finances don't stop, your expenses don't stop. So these coverages will help you continue to meet those financial needs while you're going through these illnesses.
Absolutely.
So that's huge. And I just kind of want to touch on it again, Melanie, because I want to make sure that everyone heard you correctly. So you mean that there's a policy that will pay you while you're alive if you get sick?
Yes.
And it'll cover like expenses for like hospital stuff and any other expenses that you need to cover?
It's paid to the insured, so you basically can use that money for whatever your needs are at the time.
And that's huge.
That is huge.
Like if you just think of it, like if you got a terminal illness and you got diagnosed, and of course it's devastating, and you have like 6-8 months. What if you have access to like 90% of your life benefit, right? Like living benefits, which could be $700,000-800,000, maybe $400,000-500,000. But you can use this money to go and spend time with your family. Take them on that Europe trip or whatever, something that was in your bucket list. Like this money can be used for anything. It's not like health insurance that tells you have to go to this doctor, you have to spend this money on this. This is like if your doctor gave you the note that you have this certain illness or you qualified, the life insurance gives you those money. They don't ask you for what you're gonna spend them. So that's huge.
That is huge. I also wanted to quickly point out that also another thing that has been added to some term policies is the return of premium. I mean, how amazing is that?
Exactly.
Let's say you have a 20-year term and you've been paying your monthly premiums, and the 20 years comes up and you're like, well, I didn't use it. I didn't die. Thank goodness I'm still alive. you know, you have that return of premium option. So you see how life insurance policies have evolved and changed. It's not just a death benefit that you leave to your loved ones after you pass away. Life insurance, right? You're able to use it while you're alive. You know, and that's amazing if you get to outlive your life insurance policy. I mean, who doesn't want to do that, you know?
Absolutely. And also, I want to add that like a lot of corporations, companies have term life in place, you know, for the people. But it's good thing to go and review that policy to make sure that the coverage you think you have is actually the coverage you have. Because what happens sometimes is, for example, you are insured for $1 million through the company, right? And it's term life. But most often, especially if it's like high risk companies like construction companies and stuff, what they do is they put it as accidental death, or you have to die during the work hours at the job or during the business trip. Otherwise, your family gets a lot smaller death benefit. So it will be like 300,000 versus 1 million that you think you have. So it's always important to read through those lines of the contract. And if you don't understand that, have one of us as financial professionals that know that to review it and see if we can update, upgrade, and get you a better one.
Yeah,
So
there's
Definitely.
definitely a difference, right? There's a difference between having insurance through your employment and having insurance for yourself. 100%.
absolutely. Absolutely. So Tashuma, can you share with us a little more about permanent insurance now?
Absolutely. So,
And
whole life insurance, right, is just that. It's for your entirety of your life. So that is a type of permanent insurance that, as Yana mentioned earlier, right, a lot of corporations, a lot of businesses actually own as an asset. So we'll get more into that later on in the month, right, with specifics like some other ideas with infinite banking and things like that, or family banking, depending on how you want to use it. But yeah, that is it's something that is considered an asset. There is a fixed premium for that. So the premiums for a whole life is actually it's fixed. So they're not going to change. They're not going to increase over time. Generally speaking, a whole life policy is about 100 years, right? Some are 120. So you have to look at that to see the lengths for the policies. But a whole life policy actually has a cash value. So a portion of that premium that you're sending in each month over time is going to eventually going to it's going to increase over time. And with that increase, as I mentioned, you can at times you can use some of that money to either loan against, right? If something happened, if you want to put a down payment down for a home or for a car potentially, you could use that. It just gives you a lot of options. In addition to that, there's a death benefit included in that as well, right? So that when that day comes, right, and we leave because we're all going to leave eventually, we leave the earth. We have a death benefit left over for our loved ones, right? So that they have something and they have the things that they need so that they can take care of themselves, right? Their absence. Um, I would say also some of the whole life policies they actually pay dividends, but we're not going to get too far into that. Um, some of those that would be an option, right, for a type of income for some of our clients. But generally speaking, that would be like the key points on whole life insurance.
And Tashuma, let me clarify. Like in the whole life, I know there is cash accumulation, but the growth is minimal, right? Like
Uh,
on a whole life,
Repeat that again.
the growth in the cash accumulation is minimal in a whole life. Is that correct?
Correct. It is. So there is a portion of that, right? That's going to grow, but generally speaking, that's pretty moderate, right? It's going to do a little bit better than you keeping money in like a money market account of some sort, something like that. But yeah, there's a minimum amount that's going to generate additional funds, right, with that principal portion.
Right. And there is also another one that is even newer version that everyone is talking about, and the one that we love very much, and that's indexed universal life, right? That allows you to grow money a little faster. There is a floor also, like your money protected from market losses, but your money can grow faster than in a whole life insurance as well. And it can be added in the end to the death benefit. So whoever's beneficiaries is if you pass away prematurely, they get both. They get death benefit and they get cash accumulation value. And it also has living benefits as well. Plus, this policy you can use for $1 million baby product, like, which is absolutely amazing. And I think we'll dedicate to that the whole different life, like one day that we're gonna go and talk about that in depth. But more about IUL, the Index Universal Life is absolutely amazing, can be, if it's structured properly. So use a good financial professional that puts your needs ahead, because the way it should be structured is we use, and I'm saying in a very basic way, right? Like we use the smallest amount of death benefit and the maximum cash value to accumulate that index strategy and make it like beneficial for you. But it can do wonders again if it's structured properly. Otherwise, it can be not that good, right? So it's always important to use professionals that have your needs first before that.
So another
So
awesome feature, right, with the IUL is, guess what? There's flexibility. So with whole life, right, that is, it's fixed. That amount isn't going to change no matter what. Something happens, you lose your job, what have you, right? That amount is going to be due at the month, right? Premium. With an IUL, flexibility. And that's, that's one of the amazing things about an IUL. In addition to that, right, an IUL also gives our clients the opportunity to participate, right, in the stock market without potentially having such a loss, right? We put a lock on the loss, if you would, if the market does dip, right? So that our clients aren't losing money out of their policy.
And
absolutely.
I wanted to add also, guys, that I feel that the IUL is a gem that we need to talk more about, that we need to educate people on, because before coming into the financial industry, I had no idea what an IUL was. And I think the feature that I really, really like is that, let's say you're an investor or you want to purchase real estate in the future, you want to open up a business or whatever, as your cash value is growing, you're able to pull loans out on that money,
And leverage.
unlike the 401ks or all these other types of retirement policies that are out there that you either can't touch until you're 59 and a half. It's as if
Exactly.
that's really not your money. That in the IUL,
Exactly.
this is your money. As you're accumulating cash value, hey, you've got over $30,000 cash value. You want to look at purchasing real estate property as an investment. There you go. You pull that loan out of your IUL. So the flexibility, like Tashuma was saying, is just it's just mind blowing to me.
It
And
really is.
yeah.
Same thing for business owners, just as you mentioned, Melanie. Um, I was able to help a number of business owners with just what you said, right? So instead of them going to the bank, right, to borrow money from the bank with higher interest and all of that, they made themselves the bank. So instead of doing, the high interest, right, now they're borrowing money from themselves, which gives them also the ability, right, to continue making money off of that principal. And then you can pay
And
that.
of course it's
Mm-hmm.
And of course, it's tax-free growth and tax-free
Exactly.
distribution. Again, if it's structured properly. And nobody, please don't, think that it's some magic account. Like it's a long-term investment too. Like you have to let it grow. You have to sit again. That's why it's so important to sit down with a financial professional who is specialized in it, who knows what they're doing, and who you truly trust, right? So with that said, I'm sure we're gonna again dedicate the whole day to an IUL because it's such a wonderful product that it's worth talk about. But right now, the question often people ask is how difficult is to get approval for life insurance, and how long does the underwriting take, and so on. Melanie, could you please enlighten us?
Yes. So I'm really excited because we are able to approve most clients within 15 minutes. You know, I mean, breaking technology, the underwriting process is just really fast. Now, I've had some clients that do have some underlying medical conditions, and the underwriting process, also depending on the company you know, again, we can quote you from many different companies. So it can be as simple as, I mean, I've gotten a quote for someone within 5 minutes, you know, and then I had another client and it took a couple of days. So we're here to help you all, to guide you all, be transparent with the underwriting process. You know, we will stay in constant communication with the underwriter, the carrier, and with you, because our goal is to protect you and your family. So again, it can be as quick as 5 minutes. It can take a couple of days or a week, depending on each client's circumstances. But we're here to push it through and get you the coverage that you need.
I think
Absolutely.
I think with that being said, bringing up another great point. You guys both bring up a fantastic point. The change now with the speed and the efficiency, right, with the ability to apply for a policy now is second to none. There's never been a time that it's been faster than now. So in the past, right, I've been in the finance industry for a little bit. If you remember, right, we used to take 60 days, right, for paper policies, and you used to show up to the house, right, and have examiners come out, take your blood, poke stick you a little bit. That's not an option, or I shouldn't say that it's not an option, but that's not really a reality anymore, right? We have digital processes, which I mean expedite this process so much. It makes it so much easier than the past experiences than a lot of people have had. So I encourage people, right, to look at the process now in comparison to the way that it was. It was very intrusive, right? I had a lot of questions, right? You have those weird conversations with people. A lot of that's been taken out, right? It's a real simple process. You go to the website, take a quick look, peek, put your information in, right? And usually within 5 to 10 minutes, right, you can see on the website whether or not you're approved. So night and day, I can't explain how different the process is.
Yeah, that's awesome.
Absolutely. And if there is medical exam needed, we have nurse that comes to your home and do it all at the comfort of your home. It's going to take 5-10 minutes, and it's no big deal at all. A company pays for it. So yes, if it needs to be done, it's going to be done. But the time it takes, it's so much shorter now, and it's definitely worth it.
For
So with that
sure.
said, thank you so much, Melanie, Tashuma. You guys brought so much value, and I hope everyone learned something today that they can take away, share with others who might need to hear that. And again, we're gonna be doing this more often, especially in the month of September, since it's Liam Life Insurance Awareness Month. So thank you, everybody, so much. We love you, and we'll see you soon.
Thank you,
And
everyone.
guys, if you have any questions, if you need any help with anything, please reach out to us. As I said, we are financial professionals. We work for a great company, and
We'd love
we
to
can
help.
review, we can set up a free consultation, we can talk about your needs and see if we can be any help to you.
For sure. All righty, guys. Thank you. Thanks for hopping on, everyone. Have a great day.
Yes, absolutely. Thank you,
Take care.
guys. Good to see you all.
Good.
Thank you so much for the support. All right.